Ladies and gentlemen of the crypto space, we're live on a Wednesday at 11:27 a.m., February 10th. It is time. We're going to really ramp it up to the 1,000-foot view today. To understand any particular system, we need to understand the macro systems and the reality that they're all related. With my engineering background, I often reduce things to physical phenomena and concepts such as gravity, relativity, velocity, and acceleration. All of these things are extraordinarily applicable to the things we see manifested in financial systems, something that Michael Saylor often does, and his perspective is much appreciated. The man is astute and intellectual in a lot of the things he says. And from the layperson's perspective, no doubt it appears to be far out. And I even think a lot of the things he says often are quite far out, radical even, but that's the whole point. The only way to understand these systems and the great deal of complexity involved in them is not from the simple perspective. It can't be from number go up, number go down. We need to apply metaphors. We need to apply larger, more grandiose concepts in order for our human brain to be able to process them in a way that's actually digestible and understandable. And that's the shit that's going on. Michael Saylor's next level, and we're going to try and bring some of that flavor to this stream right now. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Barry's in the house, always a pleasure. Satar's in the house, good morning, another great day. Igor's in the house, always a pleasure. No doubt folks are gonna funnel in. So I follow, this is the Rook Discord channel, bunch of characters in here, good peoples, a lot of fudsters, a lot of memeage, good times. But you guys know I'm closely following Rook. It's the only risk on position I have, and the vast majority of my positioning is risk off at this point, allocated to let's just say non-risk on positions to keep it simple. I got my eyes on the long end of the curve. I got my eyes on the short end of the curve. You got to keep your eye on the dollar. Do I really have to even look where, ESs or we're just Nasdaq or whatever, what have you? Man, it's just straight up. I saw it this morning with the dollar being quite depreciative prior to market open at 9:30. Bam, up 100 points. That's just the way it works. Dollar on the defensive, everything else responds to inflate. Interestingly enough, we've seen the contrary occur last week, or was it the week before at this point? I can't even keep track. In the face of a bullish dollar, the steepening yield curve have effectively muted the typically depreciative effect the bullish dollar induces. And that's just a fascinating piece of data that was empirically shown in the data. And we discussed the other day how the short end of the curve, I speculate to speculate as being distorted by banks front running stimulus. They need the short duration treasuries and to account for deposits. And if you throw a couple of trill into the system, yeah, you better believe deposits are going to be affected to some degree or another. And that's just the way it works. Let's pop it over. Let's take a look real quick. Short end of the curve is still completely suppressed below the 50, the 100 and the 200 SMA, and way below the 200 EMA riding support. Clearly, was this a triple bottom? Maybe it'll perk up. A triple bottom, classic technicals say this is a reversal pattern in play. It's just I think the whole market's being distorted because of external actors. In this instance, the government and the fiscal response and the distribution of value, which in good they really did try to avoid giving people money as much as possible. But the problem is the politics and the humanitarian crisis. There's some serious stuff that they're doing that affects very meaningful. Fundamental properties of the financial system that they're kind of forced to have to do, and it's pushing them down a bad path. This is not a stabilizing, or this direction that the choices they're making are heading is not in the direction of stability. It's exacerbating the distortion we're seeing in the markets, and this reality has to be factored into how we view this data, and we kind of aggregate it and compile it into hopefully a comprehensive hypothesis that is testable. And what we're seeing play out is a lot along the lines of what I've hypothesized. We're going to look at a chart. Let's look at the long end of the curve real quick and look at the dollar. Then I want to look at a chart that's really going to, it blows my mind. And it plays right into my thesis about the inflated value or non-inflated assets sucking value right out of inflated assets to reach equilibrium. And that is very consistent with the concept of mean regression, which, as we all know, is a natural tendency of markets. 30-year. Let's take a peek real quick. So it's been holding on this red line. This red line, what is this? The 100 SMA on the weekly is why I drew that, which is fascinating. So we see that the 2-year, the short end of the curve, obviously there's more assets in between. There's an entire curve. But, just to draw broad conclusions, the short end of the curve is pinned at the bottom. And the long end of the curve is lofty. It's floating at the top, sitting on support, more or less. You see the wick down and the wick up if we actually zoomed in. So I think that, looking at some data from Hedgeye and a bunch of other folks on social media, I think we're seeing the reflation narrative. I just think the short end of the curve is being distorted as banks attempt to front run stimmy. Stimmy. I said it. Let's see who else is in the stream. A lot of people joined. Danny's in the house. Stelios is in the house. Heirloom, always a pleasure. Bitta's in the house. Squanchy, always a pleasure. Crypto Chick, yes. What's your peak speculative price for Bancor Curve this year? I don't work in terms of price. My entire mentality works in terms of up or down. I think Bancor and Kybor are hitting their cyclical bottoms. The assets are extraordinarily cyclical and highly susceptible to the FOMO. They're quite liquid assets, albeit very different properties. I think Bancor is actually starting to align with the fundamental monetary properties of Kyber, which is absolutely fascinating. Their vortex and what they did with impermanent loss protection. And Kyber, on the other hand, has an incentivized supply disruption and a burn component. It's a deflationary product. The assets that are in this space literally dive into monetary policy. The general public and companies, in many regards, entrepreneurs and geeks and nerds, have created what the United States took hundreds of years to create in less than a year. And there's thousands of these projects. That's extraordinary. What you have is financial policy experimentation on an absolutely rampant scale. And developers are trying radical ideas, deploying them and seeing what works and modifying them accordingly to achieve the optimal effect. What really is the optimal effect, and it is the intent of monetary policy, is to advocate or encourage value creation, and that's what's happening. I This is not just what's occurring here is not just sustainable. It's an evolution of what we historically knew to be monetary policy. We're seeing the exploration of new novel monetary policies that have the same exact effect as historically what monetary policy was designed to do: preserve and grow and generate value. That's just extraordinary. And if folks don't see it, I'm sorry, and that's why I talk about it, because that's what's occurring, and it's going to. These macro phenomena, for the macro system to change, it takes a long time. These are gigantic systems involving millions and billions of people. But what we've seen in 2020 and 21 is empirical evidence of this occurring. The value has been created. The value is growing. It's drawing in new participants because of the opportunity. And that is what systems like this will do. This is S curve of adoption because opportunity draws in participants, more opportunity is seen, and it's a self-fulfilling prophecy. That's the way it is. Bam. Let's take a look at the dollar real quick. Dollar looking bearish. So it fell back into the wedge after being rejected by the 100 SMA on the daily. I don't have that up, but I did circle it. This was a hit, and there was another 100 SMA hit. So you have two hits on the 100 SMA as providing resistance. This is overwhelmingly a bullish pattern. Obviously, it tried to break out a bit, but falling wedge aside, technicals aside, technicals are trends. Trends have aberrations. This is an aberration, and frankly, if you look at this is a goddamn head and shoulders. So, yeah, that's this is bearish. A double 100 SMA rejection on the daily, head and shoulders. It just fell right back into the wedge. Obviously a falling wedge is a bullish pattern, but macro factors considered, sovereign monetary policy, not just domestic United States, you got some stuff pushing hard against the dollar because, frankly, it's in the process of being deprecated. If it's not deprecated by something in DeFi or intentionally by domestic policy in the United States, it's going to be deprecated by the Chinese digital yuan because you cannot compete with unlimited digital central bank currency. So the Chinese are going to absolutely force the United States to respond with strategic policy changes, likely radical policy changes, to modify the existing financial system to attempt to be competitive. But in reality, what is emerging in the DeFi space is probably the most extraordinary opportunity in, possibly you could say, in all of history, with regard to the experimentation that has occurred with monetary policy. Literally, as I said, thousands of experiments have occurred since 2020, producing an immense amount of value. And what did the U.S. do? Maybe like four iterations, or Jared Tate would know better. 4 or 5 iterations of the dollar over the last 100 years, and we've done a couple of thousand of iterations of monetary policy, supply and demand, parameter modification, and inflation deflation. Just uh, variations in the last 1 year. So take that for what it's worth. But if you got thousands of different attempts at tweaking the parameters to generate value compared to 5 attempts over the last 100 years, yeah, I'd bet everything on the fact that a better solution for value generation, preservation, creation, or whatever, transfer, will likely has emerged in the last 1 year. That's just the way it is. What am I missing in the stream? Banco Stelios, Montana. No, you're a badass, my man. I try. Stay humble. It's all good. I do this for you guys. I got all this stuff on my mind, and it's very important that I share it because, yeah, while I see it, I know other people see it, but individually, we all could only tell the story that we understand. And I'm hopeful that my story has a capacity to influence other persons to better understand the macro systems in play because there's some serious shit going down. And it's very serious, very serious. Captain Weber's in the house. Always a pleasure. Likes activated. 32 people in the stream. 16 likes. We can do better. Charlie G, my man. Stelio Squanchy, nice, nice name. Let's get them likes up, as Charlie G says. All right, let's take it over to what is quickly becoming my favorite chart. And I like this versus the SPX as well. So Bitcoin has broken out against the S&P 500, which is very notable. In fact, all right, fine. Let's see if I can pull it up without making an absolute mess. That's not going to be NASDAQ. Boop. Yeah, so what's so absolutely insane. I mean, this is extraordinary. I'm telling you right now, less barring like a risk-off event or some calamity in the legacy financial system where you got ridiculous government intervention, this is only starting. Everything about crypto is just starting now. It's kind of like Bitcoin just started, in all seriousness. Bitcoin just broke through trend resistance against the S&P 500, retested support, and printed the fresh higher high. I tell you guys this all the time. That's straight up bullish confluence. And what does this chart mean? More importantly than the bullishness and the fact that the number's going up, 11.42, what does that even mean? Is what it means fundamentally, conceptually. This is Bitcoin outperforming the entire S&P 500. That means it's sucking value out of the S&P 500. It is the better bet. It is outperforming. If I see this chart, everyone sees this chart. What does value do? Value flows from inflated assets to not inflated assets. This chart says Bitcoin is not inflated compared to the S&P 500. And that means the value, the immense trillions or whatever dollars of value is going to flow from there to a variety of places. Just to be honest, I posted on Twitter some of my equities that are just 6, 7, 800, 1,000%. And what's insane is they are not inflated. I'm watching certain stocks go up 1,000%, and I know that it's not inflated. It's still not inflated. In 5 years' time, I'm going to look at some of the stocks that I have and I'm going to see 30,000, 50,000%, because that's how much value is currently allocated grossly to achieve the absurd valuations, irrational valuations that are in the tech equities and even the broad S&P 500. um, they're just irrational. And there is no logic or reason to apply value there. It merely is they didn't know any better. So the smart money is going to be in now, be in early, and I got hundreds and thousands of percent going on in equities, and it's just starting, and it's just going to keep going because value flows. So when you're at the top, like you are, if you look at Sven wedges, these rising wedges, ridiculous rising wedges, the technicals are going to break at some point. And once they do, this chart right here, just this chart just goes straight up, and it starts to inflate, and it just keeps going up. Unless there's a risk-off event where there's like a liquidity crisis, as Stephen Van Meter talks about, like systemic instability, a correction in the equities markets is going to do nothing but appreciate non-inflated markets. Essentially, it's going to be the great value reallocation. The crash isn't a crash unless it's a crisis. Crisis is different than a crash. A crisis is different than a depreciative cascade. When you have 1,000, 1,500, or whatever the hell Tesla's at to one P&E, it's filled with just retail participants that can't handle depreciative processes on the market. Drops 5, 10, 15, 20%, it's going to cause a cascade, and just more and more selling, more and more selling is going to trip the longs, and it's just going to just keep cascading. And before you know it, you know where you're going to end up? A mean regression on the weekly. And that's the way it works. So who the heck in their right mind is going to apply value at the top of a structure like that when you could apply value at the bottom, knowing that that giant straight up line in the equities market, when it comes down, it's you're not the value isn't lost. There's value destruction, sure, but people are selling, which means there's the liquidation, which means they're going to take value out and have to redeploy it. Where they're going to move it to? They're probably going to move it to bonds for a period of time, maybe with some cash, but with no interest rates, you can't keep it in bonds, you can't keep it in cash because of the debasement of currency. You are bleeding value. Imagine moving $100 billion into freaking bonds or cash, and you're losing millions of dollars a day due to debasement. So there's no logic and reason. The search for yield, they need to chase yield, they need to get them gains. So they're going to redeploy that value to the least risky of markets. And clearly, it's not going to be the previously inflated broad equity space or the tech equity space, because retail is going to be completely scarred. They're never going to touch it. And why rebuild the sector when you have a completely untapped, rock bottom, uninflated breadth of assets to apply value to? Mining, commodities, metals, probably construction and construction materials is stuff I often talked about. And as this chart shows, the crypto space is completely uninflated. Let's take it back to the other chart. BTC USD. Look at the QQQ trust. So what does this say? We're looking for a retest. So the S&P 500 retested as support. I wouldn't be surprised to see Bitcoin come down about 7-8% to retest, support. You could probably bring this just green line up here, and we might actually be at or near support right about now. Um, if the S&P 500 and the relationship between it and Bitcoin, hey, look at that wick. Look at that, boys and girls. Oh, how crazy is that? Take a peek. Obviously, I do fat lines because there's always a great degree of freedom and nothing perfectly lines up. But look at that wick at the bottom. Isn't that interesting? Isn't that interesting? I bet you other people are looking at this chart. Stop looking at the dollar chart. It's irrelevant. The dollar is being deprecated. It's fading into irrelevance. It's going to have to be replaced by one of two things because of the digital yuan. It's going to have to be replaced. I was doing a tweet storm about this earlier. By either United States digital currency, and there'll be a blurring of the lines of national banking policy, or something from the DeFi space, which Brian Brooks would opt for. And frankly, Tom Evers, all aboard. The way he talks about decentralization is breathtaking and a sigh of relief. If the S&P 500 chart has anything to say about it, this shit's going to bounce and just keep on going. Um, this is a non-inflated market. It will draw value from an inflated market. That's the way human nature works. That's the way financial markets work. And that's the way these charts, or that's the data that these charts are telling us is how it is working. We have empirical data at this point that that is the case. Um, well, let's check back in the stream. Stelios, remember you saying duopoly for Curve and Uniswap? They're probably the best ones right now, but Sushi caught up. Yeah, so it's not just going to be a duopoly. There's some serious tech, and they all have different monetary policy and different game theory deployed. All of them, basically all of them are going to be titans of industry, in my opinion. You're going to have big ones, small ones, middle ones, innovative ones, creative ones, and they're all going to be doing some crazy stuff. But what I'm starting to think is the case. You know how I always say ongoing disruptions can't be disrupted? Sure, there's always a leader of the pack, but I think what's available right now in the forefront of the AMM space are going to be a broad spectrum of disruptions. And anyone trying to be an entrant into the space is going to have very burdensome time to try and compete and gain the notoriety and all the attention they need to be a sustainable protocol. Clearly, Uniswap is far out in the lead. Curve is ridiculous. It's the forex of the crypto space. 1inch is absolutely insane as an aggregator. Maka and 0x are the volume, transaction volume on their network is explosive. Explosive. Bancor and permanent loss protection, and just they're the original AMM. They're gonna make their way. Kyber is none of these are far from all of these are far from irrelevant. And price action doesn't reflect where a technology is heading. And just because it's not going up in price doesn't mean much. The technology that they're producing has significance. And when you look at the fundamentals and how they all connect together, like I tell everyone, a macro analysis of the way these projects relate to one another and affect one another, the causal relationships, they're all going to drive one another and push each other forward. Kyber has some serious policy and strategy, and frankly, they have a very different market. I think Kyber is targeting more so not the crypto space. I think they're heading in a very interesting direction. And just all of them are just doing different things, and that's what's incredible. So I tell you all the time with regard to investments and value allocation, fundamentals tell you where to look, technicals tell you when. I told you that Kyber and Bancor are likely doing a rounding cyclical bottom. If you look at the chart, it's quite obvious, especially considering 2020. Wait till assets get above long-term moving averages, 200 EMA in the weekly. You're not going to have monthlies on them. They're too new, a couple of years old, but you'll have a weekly. I think there's a 100 SMA on Kyber. Have to look at the data. But point being, wait for a breach to the upside of the long-term moving averages, a retest, and a new higher high to establish bullish confluence. And then basically, considering the climate across the crypto space and the broader macro financial environment, you're off to the races. That's the way it's going to work because that's what the data says, and that's the way it works. Bam. Um, Sushi up as well as Loopring Bancor. Bancor puts L2 with the permanent loss protection. I mean, it's all of it. Yeah, and Loopring's a big deal. They're the first AMM to deploy L2 tech. I don't think L2 tech is the only solution that's going to prevail. Obviously, EIP 1559 has meaning. Whether that actually gets supported by miners in the face of significant value loss, that's another story and debatable. L2 is meaningful, and obviously Rook and Keeper DAO, and L1 solutions to combat the dark forest and extract value, MEV, and and what they did. I mean, listen, these boys are brilliant. The Keeper DAO is designed with a treasury where the treasury pays for transactions. Basically the system is a L1 gas-free transaction system. The treasury pays for the person's transaction as a limit order, and extracts MEV from the network to facilitate the transaction, paying the treasury back for the gas fee. And in the end, more often than not, you're going to get additional rook out of the process because there's overflow on how much money or value the platform generated. It's just that's crazy. So I think they're in a very unique position to produce L1 solutions. Chart looks good. It's breaking down right now, but this was a very aggressive support line that I drew. You're probably looking for more of a trend like this, which means a significant rip to the downside, but doesn't really matter in the long run. I probably drew something like this. I got 3 touch points on support. See, now you can see this is quite aggressive. The vertical slope. I'm going to take out the small one. I'm going to take out the time duration. I'm going to keep this one because it can. How much longer? We got 5 minutes left in this particular candle. Maybe it'll wick up. Maybe it'll hold as support. Whatever. So we'll see what happens. But point being, I think it's heading in the right direction. And frankly, I've been in since $65. So who really cares? I don't care if it goes down to $100 at this point. I saw you post BTC S&P 500 chart on Twitter. I feel so tiny brain for not already watching this, Lal. Isn't that crazy? How crazy is that? The value flows from inflated assets to non-inflated assets. It's the way nature works, and not just human nature. Like literally, just like nature, and physics, gravity. Gravity goes from potential energy to kinetic energy, and it gets consumed. It's just the way it works. It's baked into reality. Igor, it would be awesome to see you on Real Vision. I submitted a video and a pretty decent letter and made mention of the stream. And it would be an honor and a pleasure. I think that my purpose is to help. I see things, I have a vision. And I like to tell people the story of what I see. And as Raul often says, I may be wrong, but the whole point, as Santiago Velez says, debate and talk. And that's the only way humanity proceeds forward in a constructive fashion. So I express my vision. I love to debate. I love to talk. I love to entertain contrarian ideas. Listen to Brent Johnson. I listen to Stephen Van Meter. They're brilliant in their own right. And contrarian ideas are absolutely the most satisfying when data suggests they're actually playing out. So that's great, and that's awesome. And there's nothing wrong with a contrarian idea. A lot of my ideas are contrarian, especially how I think the United States is going to respond to the impending full-on global deployment of the Chinese yuan, the digital yuan. So so I think that's a great venue, and more people would be able to hear me, and I could help more people. That'd be wonderful. D-Res, I'm putting 10% to different alt spreads. Is putting 10% to 10 different alts spreading too thin. Only you could really assess that. The market is quite inflated, relatively speaking. Inflation is relative. If you were in 2020, buying synthetics at 70 cents, and now it's at $25. I mean, it's crazy. It's quite inflated. But broadly speaking, when you look at the S&P 500 and the NASDAQ, the QQQ versus Bitcoin, there's an immense amount of value about the flow into the equity of the crypto space, because Bitcoin is the equity of the crypto space. And the reason DeFi is doing what it's doing is because the equity of the crypto space is collateralizable on a monetary network. and drawn in, attracted, completely sucked in by the monetary velocity, the capacity for the system to provide lending and borrowing functionality. It's just it does exactly what the legacy financial system does, but better, superior, more efficient. It's an iterative evolution of everything that you used to work with in the legacy financial system. Look through the food memes. These kids are brilliant. The people that the coders, the boys that did Curve are brilliant. 1 inch is done in a hackathon and is basically corporate at this point. This is all, I got to reality check you folks. This is actually really happening. What you see is real life, and these systems have properties, and we have data to understand what it's doing. We have data to understand what the legacy financial system is doing. So therefore we have data to compare what this new system is doing as compared to the legacy financial system. And the data suggests what's occurring is radical, transformative, extraordinary, evolutionary, and it's about to disrupt the shit out of everything. Bottom line. Do I watch FBTC? Not really. F is money. You need money to interact in the DeFi space, so have a cash account. I don't know, here's my cash account. What I got? A couple of bucks sitting around. Keep 3 grand sitting around because Ethereum transactions nowadays are like $200, $300, $400 a piece. That's crazy. But the opportunity is abounding. You got to remember there's 45 million millionaires in the world, and if you're throwing around 100 grand, you don't really care about a two, three, $400 transaction. So that's why you see gas prices elevated like this because there's dirty money out there. Hey, look at that Rook chart. Looking at wick up in the last 42 seconds of the candle. How do you like them apples? If this thing holds support on this support line, that would be crazy. And it might fall down. Chart tells the story. Always remember, the chart tells the story. Um, Noah, what is your opinion on Pancake Swap, Binance chain? A lot cheaper than apps running on Ethereum, right? Okay, cool. L1s, other networks, great. Do you think Binance chain is the future? I think Cosmos and Polkadot and Elrond has some serious momentum. I think Binance Chain, unless it's bigger in the East than what I see here in the West, I don't see anything interesting. I don't know what that means, the school of drawing. Oh, is that referring to BSC, Binance Chain? Possibly. All right. Anything else to look at? Um, Stop by the Discord for Rook. It's always good to hear what those crazy boys are talking about. Keep an eye on this chart. You damn well know I am going to. You see what I have up here. This is the stuff that I find absolutely interesting. This stuff is going to change everything. Sushi, 1 inch, Urine, Aave, Zapper to take a look at everything from a top-down perspective. It doesn't show everything, but it very much helps. Curve, just huge, and MegaDAO, the Oasis. Keep an eye on the charts. I do have the dollar chart up. I don't know why anymore. This is a bearish cross right there, 200 EMA crossing the 200 SMA. So there is some bearishness in the chart from a US dollar perspective. But yeah, okay. So this chart really kind of supersedes everything and tells the macro story. As I said, 1,000-foot view. It's the whole point of the stream, and it's going to broaden your perspective, broaden your horizon. And really, when you look at things from a macro, imagine looking down from outer space and you're looking at Earth. You're like, holy shit, there's an attack coming. You see what's going to happen. You literally see what's going to happen before it's going to happen. And that's the whole point of macro. You see the puzzle pieces laid out on the board, and you're able to see the sequence of events, the causal reality that's going to unfold as events trigger events trigger events, and that gives you a certain degree of capacity to predict what will play out. And at this point, there's definitely a good. I have a good sense of where things are heading. Probably, 10 years is a pretty long time horizon. With regard to energy transformation, battery metals, mining, so on and so forth, and vehicles and the energy grid, and corporate mega batteries and the energy grid mega batteries. That's probably a 10-year time horizon. But there's some serious stuff going to go down with 5 years with regard to financials. Let's put it this way: within 5 years' time, if you're still using paper dollars, um, yeah, that's probably going to be a problem. And when I say a problem, not just with regard to functional financials, we're talking about probably a problem with regard to global financials and the capacity for sovereigns, nation states to interact with one another. There just isn't enough dollars in circulation. There's too much debt, and the current system is completely unsustainable. That's what the um, just a lot of the big boys, the big think tanks talk about the IMF and whatnot. Anyway, let me see if I missed any messages, and we'll wrap this thing up. People of Blocknet says 1 year ago that the most revolutionary project they know in crypto is AVAX. Last asked you there was any thoughts on that? Maybe now, just asking. What it's an L1. It's an alternative network. Cool. I like alternative networks. And it seems like there's a great degree of interoperability, which is probably it's having the run it's having that you see in the 24-hour sort on CoinGecko. Lovely. That's good. Keep an eye on it. Everyone has a different portfolio. You can't own everything you want to own. Otherwise, you'd be, all in or spread too thin. You can't be either one. I don't own everything that I want to own. Nobody likes missing out on immense gains, but missing out on immense gains isn't the same as losing money. So, what your portfolio is, you got to remember, is an expression of how you see the market. And it's not, in the end, interestingly enough, a portfolio isn't even about making money. It's kind of like I've learned to think of it as like poetry or writing a book. It's an expression. It's the way I see the market, and that's cool. I'm very happy for folks that have done well. I'm very happy for folks that own Tesla stock, and that's okay. Doge. Oh goodness gracious, that's going to be a god. Listen, Doge is going to be a serious tragedy because it's useless. Um, and useless things end up where we know they end up. Any other sites to check crypto prices besides CoinMarketCap? Yeah, CoinGecko. CoinGecko. That's the name of the game. 12:04 p.m. on a Wednesday, February 10th. We have 46 people in the stream, 23 likes. We can do better. As always, I thank you all for joining me. It is the middle of the week. We have 2 more days in the week, and it'll be my pleasure and my honor to do this thing tomorrow as well. So I wish you all a wonderful day. Tell everyone to subscribe. I'll see you then. Peace.